Ladies and gentlemen, good day and welcome to the Knowledge Marine Engineering Works Limited H2 and FY'24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amar Yadi from Orient Capital. Thank you and over to you, sir.
Thank you. Good evening, everyone. Welcome to the H2 and FY'24 earnings conference call of Knowledge Marine and Engineering Works Limited. Today on this call, we have Mr. Sujay Keval Ramani, Chief Executive Officer, along with Ms. Kanak Keval Ramani, Director and Chief Financial Officer. Before beginning with the call, I would like to give a short disclaimer. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations as of today, and actual results may differ materially. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. With this, I now hand over the call to Ms. Kanak Keval Ramani for the opening remarks and financial performance of the company. Over to you, ma'am.
Thank you. A very good afternoon to everyone, and on behalf of Knowledge Marine and Engineering Works Limited, I welcome you all to the H2 and FY'24 earnings call of our company. I hope everybody had an opportunity to go through the financial results and investor presentation which has been uploaded on the stock exchange as well as on our website. In FY'23-24, it is to announce that we are fully aligned with our growth strategies and have successfully entered in new segments. We are proud to share that we have started operations into the Bahrain market by getting the sand mining license and securing a robust order book of approximately rupees 450 crores. Additionally, our entry into inland waterways, marked by winning 2 significant contracts, opens up new opportunities to demonstrate our execution excellence and secure future contracts. To execute these inland waterways contracts, we have also successfully entered the cutter suction dredger segment. Moreover, we are pleased to report the successful completion of the fishing harbour contract work at Mangrol. These accomplishments highlight our dedication to expanding into new segments and underscore our commitment to growth and excellence in execution. I would now like to give a brief on our order book win and status during FY'24. During FY'24, we achieved several prestigious milestones which are as follows. International expansion. We secured our second international contract from the Myanmar Port Authority for the dredging and enhancement of the Yangon River Channel. This contract builds on our previous success at Sitwe Port and marks our first independent international project separate from our initial collaboration with the Government of India. We are pleased to announce that we have also won a repeat contract from Myanmar Port Authority, double the value of the initial one, for the ongoing Yangon River dredging maintenance work. Secondly, entry into Bahrain market. We successfully entered the Bahrain market, specifically in the lucrative sand mining sector, aligning with our waste to wealth vision. This venture has resulted in an outstanding order book of approximately 450 crores over the next 5 years, significantly boosting our business visibility. Our dredger is already deployed following the securing of the necessary license from Bahraini authorities, and we have realized a revenue of approximately 15 crores in FY'24 from the Bahrain segment. Next is new customer acquisition. We expanded our customer base by adding the order from Mumbai Port Authority. We secured an order from the Mumbai Port for the hire of 2 dock tugs valued at rupees 34.49 crores for a contract period of 7 years, marking another significant expansion for KMEW. Going to the additional contracts, we clinched an order from the Paradip Port Authority for the supply of a 20-knot speed patrol boat with a manning crew on hire valued at rupees 5.02 crores. Furthermore, our success at Visakhapatnam Port is demonstrated by the repeat of our contract by 3 more years at a higher bid valued at rupees 3.44 crores. Going ahead, National Waterways contract. Looking ahead in FY'25, we are delighted to announce our involvement in the National Waterways contract, having won 2 contracts we are aggressively pursuing more opportunities in these markets. The supervision of these projects by the World Bank provide us with a competitive edge both domestically and globally. Currently, we have 2 orders worth approx rupees 172 crores. Our current order book as of May 24 stands at rupees 733 crore with order win totaling rupees 694 crore in FY'24 and an average tenure of more than 3 to 4 years. Now, I would like to give some highlights on our asset base. With these contract wins, our fleet will soon consist of 24 vessels, which remarks our commitment to expand our fleet to 40 or more craft in next few years. We have successfully added 3 more dredgers, River Pearl 18, a trailing suction hopper dredger deployed in Bahrain, and 2 cutter suction dredgers for River Ganga project with IWI, and will add 2 more cutter suction dredgers, bringing our total to 10 dredgers. In our port ancillary craft business, we will add 4 numbers of workboats for the River Ganga project, serving as supporting vessels. Additionally, River Pearl 14, River Pearl 15 and River Pearl 16, which are under construction and are speedboats and tugs, will be deployed at Paradip Port and Mumbai Port respectively. Our order book visibility continues to remain robust with interest expressed in projects worth approximately rupees 1200 crores. We are committed to exploring new segments while maintaining a concentrated focus on our existing ones. Moving on, I will now give a slide of the financials. In FY'24, we achieved a revenue of approx 164 crores and recorded an EBITDA of around 50 crores, maintaining strong EBITDA margins at 30%, which underscores our commitment to stability. The decline in revenue was primarily due to external site conditions. However, we remain optimistic about our revenue outlook and expect to see improved performance in the coming years with continued EBITDA margins of around 30%. Our profit after tax reached rupees 33 crores with our PAT margin rising to 20%. Our net debt increased due to the acquisition of new vessels in FY'24. We align our existing debt facilities with specific fleet contracts, ensuring timely repayment before the completion of each contract. Our strategic vision focuses on establishing a sustainable and reliable dredging and marine engineering company in India. Furthermore, we are excited to announce that KMEW will soon be listed on the BSE main board along with a direct listing on the NSE main board. This milestone is a significant achievement for our company, reflecting our growth and commitment to becoming a major player in the industry. Being listed on these prestigious exchanges will enhance our visibility, attract new customers, and provide us with greater opportunities to expand our operations and achieve our strategic goals. Our strategic vision continues to center on establishing a sustainable and reliable dredging and marine engineering company based in India. We remain committed to expanding our operations and fleet. This ongoing expansion plan mirrors our ambition to attain a prominent position in the dredging industry. Additionally, our objective is to capture a sustainable market share of 10% in the dredging business. Through the utilization of our expertise, advanced technology, and robust project execution capabilities, we are actively positioning ourselves as a trusted and preferred partner in the industry. Thank you. Over to you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Maruti Nandan Sarda, an individual investor. Please go ahead.
Hi, good evening. Am I audible?
Yes.
Hi, yes, good evening. This is Sujay Kevalamani, the CEO. I would like to add Mr. Saurabh Daswani, the Managing Director of the company, is also available on the call. So you're audible, sir. Go ahead.
Okay. My first question is on the cash balance available. We have around 50 CR of cash available, and at the same point of time, we have debt as well, long-term as well as short-term. So are these debts in foreign denomination or are these local ones?
No, sir, can you repeat? Your voice is echoing too much. Can you repeat the question?
Okay. Am I audible now?
You're audible.
Yeah. The question is on the debt. Currently, we have a debt of around 60 CR, long-term and short-term taken together, around
That's correct.
60. And at the same point of time, we have cash balance as well on our balance sheet, which is approximately 48-50 CR. So are these debts taken in foreign currencies? That's why we are not using the cash to pay it?
So the reason that we are not using up the cash balances is for future growth prospects. Any future acquisition capex that we do requires us to keep 25% cash balance as against the debt that we pick up. So we always want to have this cash balance available with us. That is one of the reasons. Secondly, any good assets available in the second-hand market, if we have cash available, allows us to take a faster decision as compared to waiting for debt from a bank. So as our decision making is faster, we are able to negotiate better prices. So we always want to have certain amount of cash available with us at all times.
Okay. Second question is on the non-current investment. If I add up both non-current, which is under non-current assets as well as current assets, it totals up to around 15 plus 30, around 45 CR. Can you give breakup of this? What constitutes this 45 CR?
So I'll give you a breakup of it. Non-current investments includes the fixed deposits which are kept on lien for issuing the bank guarantees by the bank, and includes our investment in our subsidiary companies.
Okay.
And assets includes the tax which we have already paid, TDS and GST and other liabilities and other assets which we have like cash and inventories and debtors.
Okay. No. My question is on the current asset side, you have item number F, other current assets, that is 15 CR. What's breakup of that one?
That is the revenue available with the tax authorities like TDS and GST input.
Okay. And I have one more question, if you can allow me, which is on the top line. So this year we have done a 164 crore of revenue, and out of this 15 CR is coming from the Bahrain project, right?
15 crores is coming from the Bahrain. 15.
So other than Bahrain project, we have done revenue of around 150 CR, right?
Yes, correct.
So that other revenue, we will be continuing the same run rate of 150 CR, or there will be an increase of maybe 10, 15, 20% in FY'25?
There is definitely going to be an increase in it. Sir, besides your question, I'm sure everybody will want to know why there was a reduction in the revenue as compared to the previous year. I would like to explain that one of our contracts, only there has been a delay in recognition of revenue in one of our contracts. In the month of January, there was an unrest in the state of Rakhine, where the Sitwe port is located. We were supposed to carry out maintenance dredging for the particular year last year, but due to unrest over there, Government of India, Ministry of External Affairs decided to move out all the Indian locals from the site till further orders, and we moved out of the site and we moved to Yangon. We were supposed to recognize additional 70 crores of revenue this year, over and above 165 crores from that order, which is now delayed and will be recognized this year.
Okay, so this year, other than Bahrain, we can assume that at least the top line would cross 200-220 crores, right? Other than Bahrain.
Yeah, that's possible, yes.
And Bahrain will be contributing around 90 CR because it's a 5-year contract of 450. So if I divide and equally on 5 years, it will give 90 CR. So we can expect a top line of 300 CR on a conservative basis for FY'25.
So this year we are planning for upgrade of the vessels that we have mobilized to Bahrain, because we have learned certain things, local things over there. So the revenue this year will not be 90 crores. It will be close to 75 to 80 crores, because we are going to upgrade the vessel and have a downtime of 30 days. So that is the difference. But that revenue of 10-15 crores will definitely be recognized in the next year.
Okay. So on a conservative basis, if I take your numbers, 225 from the existing projects and 75 from the Bahrain, we'll be touching a 300 crore top line next year, that is FY'25, with the same EBITDA and PAT margins, right? We can maintain these margins or better these ones?
Let's keep a range of between 270 to 300 crores as the top line, sir.
Okay. And what's the net profit margin conservatively you are looking at?
Sir, that has always been consistent in the history between 20% to 23%, sir.
Okay. So minimum bottom line we are looking at is 60 CR. That's the conservative estimate for next year, right?
It should be a minimum of 60 CR, sir.
Okay. That's fantastic. Thanks a lot for all the explanation, and I wish you all the best.
Thank you, sir.
Thank you. The next question is from the line of Sarang Jolekar from Vimana Capital. Please go ahead.
Am I audible?
Yes.
Yeah, thank you for the opportunity. So I wanted to ask, you said we can expect 270 to 300 top line in FY'25. Just wanted to understand, we have an order book of 733 crores with a average tenure of 3 to 4 years. But when we're saying 300 crores, that's almost, a higher percentage of your order book. So how are we planning to recognize such a big share of the order book, almost 41% of the order book in 1 year?
Sir, we have a confirmed order book of 733 crores. In the next 30 to 45 days, we have a bid pipeline of 1200 crores. We are expecting additional orders to the tune of 400 crores from that. We are very likely to get another 400 crores. So that will take our order book in excess of 1100 crores. 1100 crores spread out over 3 years easily gives us 300 crores next year.
Right. So, assuming that you get additional 400, you are saying 270 to 300 can be doable.
Sorry?
I mean, just on the basis of existing order book, let's say, how much of that will be executed?
I'm unable to hear you clearly, sir. Can you speak up?
Can you hear me?
Yeah, better now.
Yeah, I said, just on the basis of existing order book and not the one in the pipeline, how much of that 733 do you plan to execute this year?
So if it remains only 733, right? That's what the question is, right? If we don't secure any other orders.
Right.
So it will be between, if we don't secure any further orders, which is very unlikely, then because we have a hit rate of more than 50% in the past, so it will be around 230 crores.
250. All right. Okay. Also, National Waterways contract that you got, has the execution already started, or the entire recognition will start in FY'25?
So the first contract that we got from for the Farakka-Kalgaon stretch, the start date for the contract was 23rd of April 2024. We are working towards achieving the LAD. And once we achieve the LAD, then 3 years of contract duration will begin. We are expecting before 15th of June, we'll be able to achieve LAD, and our revenue recognition will start from 15th of June for the first stretch. Secondly, the second stretch of Ardiga that we have secured, we are in the mobilization phase right now. The mobilization will be completed in July, and the revenue recognition will start post that.
Okay, so first one will start from 15 June and second from 15 July.
And we are expecting, we are expecting additional 2 more orders from Inland Waterway Authority of India within the next 30 to 45 days. And those orders also have to start within 45 days of receipt of the order. So we don't need to wait till next year to start any of these works.
Okay. So typically for IWAI, 45 days is the time period you need from winning the order to starting to execute it.
Yeah. So all IWI contracts have 45 days of mobilization period and then commence.
Okay. Thank you. One last question. In Bahrain, last time you had said that there's a demand for one more vessel. So do you have an update on that?
Presently, we are exceeding the expectation right now, and we will take a look at adding another vessel only after October this year. So we have just started, and we want to see at least 6 months of pure, correct streamline of revenue coming in, timely payments, and reliability on the counterparties, and then 100% reliability on the counterparties, and then we will be introducing the second vessel. Presently, our company focus is on carrying out capex and increasing our revenue from Inland Waterway Authority of India.
All right. And sir, for FY'25, how much capex do you plan to do?
We have done a capex of about 40 crores up till now, and provided that we get all the contracts and build an order book of 1100 crores the next 45 days, we will have to do an additional capex of 100 to 120 crores.
So around 150 CR of capex in FY'25. Okay. Thank you. That's it from my side. I'll come back for a follow-up question.
Thank you. The next question is from the line of Abhishek Agarwal from Naredi Investment. Please go ahead. Mr. Abhishek, please go with the question.
Yeah. Am I audible?
Yes.
Yeah. Good evening, sir. So my first question, we have 450 crore sand mining order received from Bahrain market. Out of this 15 crore order executed in S2. So what is the weakness in execution this 450 crore order?
Sorry, what is what?
What is weakness in execution? So we done only 15 crore in S2 and our order pipeline is 450 crore.
Sir, initially when you start a project of 5 years, it takes time for the vessel to streamline, and it started from end of January, early February. So we only had maybe 65-70 days of working period. And initially, usually logistics issues and all of this will come, but now we have streamlined the project. That is why we believe that we will be able to do a higher run rate compared to last year.
Okay. And contract received in Bahrain market, which will generate revenue from dredging activity or from selling mining sand. And if revenue comes from selling mining sand, then any contract has been made with someone, and where this mining sand is used.
Okay. So it is purely from the sale of sand. There is no revenue that will be recognized from the dredging activity. The dredging activity is only being done to mine sand from the sea and bring it ashore. We have declared in the past that we have received letter of intent from 6-7 different companies, adding to this order value of 450 crores. And we have started recognizing revenue from these entities for providing them with the sand, supplying them the sand. The sand is mainly used for the construction work of buildings, of roads, bridges, and then there is also a huge demand for reclamation purposes. The Bahrain 2030 vision and 2050 vision require approximately 1 billion cubic meters of sand that needs to be reclaimed for construction of 5 islands, and we are looking to contribute to that project in the long run. So we have established ourselves with that, and reclaiming land in Bahrain will become one of the largest segments going forward, just not the selling of sand in the market.
So in 450 crore orders, any price escalation clause?
Sorry, 450 crore?
Price escalation clause?
Yeah, it is not a fixed price contract. It is market driven. So this is not with the government of Bahrain. This is with private entities. And we had fixed the price for the first 6 months. We are free to increase the price as driven by the market after the initial 6 months.
Okay. And sir, last question. Recently, you won order from IWAI, and going forward, you also mentioned 2 more orders received from IWAI. So for this contract, we have a sufficient vessel, or we want to add more vessels for IWAI order?
Sir, we will have to add cutter section dredgers and allied crafts for these orders. That is why we will have to do a total capex of 160 crores this year for the additional orders on cutter section dredger and the allied crafts.
Okay. Thank you so much.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. The next question is from the line of Rudesh Kalyani from Kalyani Private Business. Please go ahead.
Hello. Am I audible?
Yes. Good evening. You're audible.
Yeah, good evening. So I have got 3 questions. So I see that other expenses have shot up by somewhere around 2.5x to 3x. So what's the reason behind that?
The reason behind that is the major expense which we have done in the second half is the CSR, which we have to do in the second half, and it is calculated on 2% of the average net profit of last 3 years. So around 70 to 80 lakhs has gone in CSR, and plus if you see, we have added the orders in the second half, and that is why the other expenses have shot up. And there were some legal expenses which we have done in drafting the agreements for the vessels procurement and all that. So like that, if we add all of those expenses, that is why the other expenses have shot up.
Okay. And I see a trench of stake getting sold by a promoter in the month of Feb. So what's the reason behind that?
Well, we believe that we needed further money to grow, and we had worked in the company for last 10 years. We had kept our salaries really below par, and we believed one day we will be able to reach a valuation where we would dilute 4-5% and recognize the hard work put in by the promoters in the last 10 years. So we found best buyers, mutual funds, to come in and invest in the company, and at that time promoters decided that we can disinvest about 5%, 5 to 6% of our stake.
Do we foresee any future selling in the future as well?
So actually, presently we have decided that we intend to buy back our shares at this valuation which is available. So you will see next week the promoters actually buying back some of their equity.
Okay. And one more suggestion is, whenever we get a project, we give commentary on that particular project. In the similar lines, is it possible to give commentary post result as well, as I didn't see in many of the quarterly results, half-yearly results?
We give the investor presentation post announcement of the results, right? And in that, everything is mentioned in detail.
We usually do this conference call to discuss as much as possible with all the stakeholders. So, but we will take your suggestion under consideration, and we will work with our IR team to see what can be done about that in the future.
Because the thing is, we were in the shadow till this call happened, as why the top line has come down. So it will be better if you have something like commentary from the management side, or press release, or something like that, which highlight what all happened.
I believe so, sir. I understand your reasoning, and I think it would have given better information about the given situation. So we will take that under advisement, and we will try to do that from next time onwards. And I would say, believe in the company, the fundamentals of the company are very strong, and it is just one-off that this happened, and this was not in the hands of the promoters, neither the government. A situation happened, and then it is just delay in recognition of the revenue. There is nothing else. No change in margins, no change in... So we have built... Last year at the same time, our order book was 200 crores. Here today we stand at 700 crores. So we have done very well in securing orders. We have done very well in adding assets. We have done very well in execution up till now. So this was a one-off situation that happened, and I mean, God willing, should not happen in the future, but something that was beyond the control of the government of India and beyond the control of the promoters of the company. So the best we can do is be more clear about it in the future so that people know.
Okay, thank you. And last question is, can we quantify when will we move into the main board?
Definitely within the next 60 to 90 days.
Okay, thank you. That is from my side. Thanks, all the best.
Thank you. The next question is from the line of Vinay Agarwal from Sri Venkatesh Investments. Please go ahead.
Thank you for providing me the opportunity. Just like I would like to know, the management will provide an outlook for FY'25 in regard to the order book. We have grown the order book multiple times in FY'24. So what could be the, by the end of FY'25, what could be the type of quantitative order book we would have? And approximate idea.
So presently, the given scenario is that we have an order book of 733 crores. We intend to add another 400 crores very soon. That will take our order book to 1100 crores. Exhausting about 300 crores this year, we should reach around 700-800 crores going forward, and we would be able to add additional 50% of that by the end of this financial year.
Okay. Thanks a lot, sir.
Thank you. Ladies and gentlemen, you may press star and 1 to ask question. The next question is from the line of Abhishek Rao from KLTS Capital. Please go ahead.
Hi, thanks for the opportunity. I had a couple of questions. One simple question I had was on employee benefit expenses, which have gone up slightly. It's not a very large number, but I want to understand, is it a routine year-on-year increase, or are we adding capabilities in any of the teams?
It's a combination of both, sir. It's a combination of both. We have added more professionals to the team as we are growing, and with the help of these professionals, we were able to demonstrate to Government of India that we have the given management to additionally grow our bandwidth and take future orders. And that's why we were able to enter into IWI. We are planning to enter into other businesses of dredging with DCI, and these people will help us secure those orders.
But still it is, 5 to 6% of the revenue. So I think we are within the margins and all.
Yeah, I just wanted to understand, are we adding capabilities just from a perspective of what is the future that is going to look like? The other question I had was, there is a slight increase in gross margins. Is this because of cost coming down, or are we seeing some price increase that's happening? It's very small, it's around 3%, but just want to understand that.
So, first half, two of the contracts, major contracts were on with a JV partner, and second half, those contracts got over. So subcontracting expenses of the JV partner got reduced. So that is how the margins improved.
Okay. The other question I had was, how are we able to win these orders? Like, what is it that we have? I know experience, etc., but our part, we've been able to get around 50% of the orders. Like, what is the unique point that we have that is gaining us this kind of order book?
So first, there is very limited competition in the market. Second, our ability to source the equipment and be able to deploy it on time is another capability that government looks at. We meet all the qualification requirements as per the CVC guidelines. all these put together in the team that we have, that helps us price the bid properly as compared to the competition, and that's how we secure the orders.
And what stops competition from coming into this segment, sir, considering the margins that we are looking at?
So it's an evolving thing. So there are entry barriers, which I have been saying year on year again, in any dredging business, in any dredging contract. So let's assume it's a contract of 100 crores. A 100 crore contract requires that you should have done a turnover of 30 crores average for the last 3 years from the same business. You, in terms of work experience criteria, you should have done 3 works of 40 crores of the same kind of business, 2 works of 50 crores and 1 work of 80 crores of same kind of business. And you should demonstrate to the government that you are having the possession of the equipment if the work is awarded to you. So that kind of paperwork to that effect from the last owner of the equipment or from the yard should be available with the company. So all these 3 parameters have to be met impeccably for the government to qualify any company to opening their price bid. And then you have to be competitive enough to win the price bid. So it's a challenge how somebody has to invest into the equipment, have that criteria, and then come and bid and be able to secure. So we have done this for various companies over the years, and now for our company for the last 8 years, and that is what allows us, gives us an edge compared to the competition.
Understood, sir. Last question I had was, you were mentioning that the revenue or, whenever we dredge, the sand is sold and, it's determined by market prices. As a company, do we look at, say, entering into long-term selling agreement with any of the end users for the purchase of the sand, or is it that we take a open call at the time of having inventory?
So 60% of our sand that we mine has been agreed into a sale for the next 5 years. So we already have a fixed contract wherein we can vary the price as per the market, but it is going to be picked up by our clients. 40% we have kept it for the open market.
Okay. And where do you think I will be able to track the pricing of the sand market here? Anything which is available or something that you probably refer to at the time of taking the decision?
So it's a small market controlled by a very few players. So we are the 5th company and only Indian company present in Bahrain which has got this. The other 4 are Bahraini companies. Our vessel is the most technologically advanced vessel available in Bahrain right now. It is all supply demand and it is driven on a almost daily basis. So I don't think there is this data available in the public domain as much, but presently the sand market is anywhere in Bahrain between $2.5 per ton to $2.75 per ton, which translates to 3.75. BD, not dollars. Bahraini dinar. 3.75 Bahraini dinar to 4.25 Bahraini dinar per cubic.
Okay, got it. That's it from my side. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask question. The next question is from the line of Sarang Joglekar from Vimana Capital. Please go ahead.
Yeah, hi. Thanks. So, again, in the order book and revenue recognition, so you said 75 CR you will recognize in the Bahrain project this year, and on the IWAI projects that you have already won, how much of recognition will happen in FY'25?
So we have secured an order book of 175 crores from Inland Waterway Authority of India. That is over a period of 3 years. So we will be able to bill between approximately 55 to 57 crores this year.
55 to 57 for IWAI.
Yeah.
Okay, and 75, so that is around 130 from these 2 projects.
We have additional 50 crores from the Yangon project. We have about 70 crores coming in from Sitwe, and then additional ancillary businesses put together. That is why we are estimating at 270.
That's how you get at 330. Okay. So, apart from the Bahrain contract, you said 60% of the sand mine is sold through contracts and 40% is open market. So the 450 CR order book that you have given, that is only considering the 60% contract value, or
No, it is 100%.
40% is over and above that?
That is with 100%.
Sorry, I couldn't hear you.
That value is with considering 100% of the quantity that we supply in the market.
Okay. Got it. And on the competition side, just can you name any players who are there in the inland waterways who were bidding with you in the tenders?
So presently, when we are in the last few months that which bids have been opened and placed, we have seen only 4 players. One being Northern Express Infra Private Limited, NIPL. Second one is Dharti Dredging, and third one is Adani, and the fourth one is us.
Adani and?
Fourth one is us.
Okay.
Most of the bids we have seen 2 players. More than 50% of the bids it has only been us and Dharti Dredging, whereas few bids it has been Adani and us and Dharti, and there's only 2 bids where it has been NIPL, us and Dharti.
Just to understand the competitive intensity, can you give some information on how much is the difference between L1 and L2 in these contracts?
So, Farakka Kelgaon, I will let you know, we secured the bid at 83 crores and Adani was at 108 crores.
Okay. And the inland waterway is the latest one that you got?
Bid that we secured, we were at 62 crores and Dharti Dredging was at 67 crores.
All right. Got it. Yeah, that's it from my side.
Thank you. The next question is from the line of Vikram from Nuvama Wealth. Please go ahead.
Good evening, Sujay sir and Kanak ma'am. Firstly, congratulations on breaking into national waterways contracts and even cutter suction dredging. 2 questions from my side, and I'm sorry if this may have been answered as I joined the call late. First is, given the scope of national waterways project and also the World Bank funding, are we expecting competition to increase or maybe entry of foreign players?
Hi Vikramji. Historically, if you see in the last 10 to 15 years, none of the foreign dredging companies have participated in any of the inland waterway dredging contracts. Reason being, they do not have sufficient data to take a call. I will give you a little bit of, there is 106 national waterways identified by Government of India, out of which presently we are only working on one, National Waterway 1, which is Ganga. The second contract that are in the process or in the pipeline of bidding is for National Waterway 2 Brahmaputra. So there is more than 20,000 kilometers of rivers that need to be dredged, and we have only secured presently about 170 kilometers from it. So there are not sufficient players available in the market with sufficient experience criteria for government to be able to bid out a complete river stretch of, let's say, 1,000 or 2,000 kilometers. So the only option available with Government of India today is to break it up into smaller stretches of 70, 80, 90, 100 kilometers, because the companies available with the experience can only bid for such projects. 3 years down the line, we would have secured sufficient experience to be able to bid for single river at a stretch. So right now that's where it is.
Okay, thank you. That seems like there's a long runway for growth just in this segment.
It has just started. It is just the cusp of a start,
Okay. And my second question is on the margins in Bahrain. I see revenue was close to 16 crores and segmental profit was about 10 crores. So EBIT margins would be at 60% plus. Is this going to sustain or will this taper down going forward?
It will taper down going forward because this year we will be doing some upgradations to the vessels, so there will be some expenditure to it. So initially always we are able to recognize higher, but then as we go along, I wouldn't project 66% or 60% as EBITDA margin.
But this would definitely be higher than Indian.
It will be higher than
Indian
Indian market.
Okay. Thank you so much and best of luck for the future.
Thank you.
Thank you. The next question is from the line of Saveen from K16 Advisors. Please go ahead.
Hello, everybody. My question was regarding,
I'm sorry,
there is...
your line is not clear. Can you just use headset, please?
Okay, hold on. Is this better?
Oh, slightly better.
Okay, this is the best I can do. I'm holding the phone in my hand. Please, if you can just, try to understand and then you can answer. See, you've mentioned a lot of dams and as the prospects going forward, and even the earlier participant, you have responded that there is a long way to go. I was just curious, so many ports have come up over the last 15, 20 years. So the market for dredging in India should have exploded. And yet we have, players with only a few hundred crores of revenue bidding. So who are we trying to replace? Or all these ports that have come up, do they have their own captive dredging equipment and their own way of, carrying out all the dredging requirements?
So it was very difficult to understand you, but I will try my best to reply. One, I believe you mentioned about projects on dams, right? So presently, all the elections were going on. All the state governments had gone silent for the last 2 months on that. We believe starting July, again, that subject will heat up and bids will continue. So you will see results going forward in the future on such bids. Second question, I believe, was so many ports have come up and the dredging market should have exploded, but we only see a few hundred crores worth of revenue. We started from a 2 crore revenue company to 200 crore. We are projecting 300 crores. This is the only way to grow is slowly because of the entry barriers. And there is no other company besides us which has grown at this pace and in such organized manner. Adani Port and Special Economic Zone has secured most of the private ports, and APSEZ has their own dredging team and own dredging assets for their ports. Government ports do not intend to buy their own dredgers. Government took a policy decision in the 1990s no longer to buy their own assets, but to give out all the contracts on all the work of dredging on contracts. Most of the capital dredging revenue in India is secured by foreign players, Dutch and Belgian companies. The maintenance dredging market is captured by Dredging Corporation of India, mostly between the tune of 1,000 to 1,200 crores per annum. So we are growing into that business. So in the market of about $1 billion market in India every year in the port sector. So we are growing into it. We intend to go from 200-300 crore company to a 500 crore company very soon. So that is what the idea is.
No, sir, thank you for the detailed answer. And let me clarify. I was not making a sideways comment about your small size. What you have achieved is truly stupendous. So I'm highly appreciative and very impressed with your performance. I was only saying this in general, and thank you for clarifying that Adani and APSEZ, and it sort of gives a lot of clarity. One further question. Like, the Dharti dredging, etc., they have been listed for a very long time. I remember visiting them more than 20 years ago, more than 22 years ago. They haven't sort of done quite that. Is there a scope for any subcontracting work with Dharti dredging or for any other entity which has access to market but cannot fulfill the role because of its cost structure or equipment not being up to the top grade, etc.? If you can elaborate.
Sir, I'm very sorry, but I didn't fully understand the question. Did you say that Dharti Dredging was a listed company?
I'm sorry, Dredging Corporation. Dredging Corporation of India.
Yeah, Dredging Corporation of India?
Yes, correct.
Yes, it is a listed company. It's a listed entity. And that's the Government of India's entity. 74% stake is owned by 4 government ports, balances with the public. So they are basically into the maintenance dredging market only. They do not venture out to foreign countries, and they are very limited contracts that they pick up in India, and their revenue can be recognized only that. They have an aging fleet, and very soon, unless they add new capacity, there is very rare chance that they will grow further. Mostly, they compete with the foreign players like Vanode, Boskalis, Yandenal, Dredging International, and they have a much younger fleet. So wherever capital dredging business is there, it goes mainly to the foreign players.
Okay. Now, thank you for this elaboration. Now, I was just checking if there is any chance for being a subcontractor to them and thereby increase their revenue. Because
we are a subcontractor to Dredging Corporation of India. We executed a contract for 100 crores of rock dredging for Dredging Corporation of India. It was a capital dredging contract, and DCI did not have the in-house capability. Government of India gave it on nomination basis to Dredging Corporation of India, and they tendered it out, and we were the sole bidders for that contract, and we have successfully completed that work for Dredging Corporation of India. Presently, we've been declared L1 for a second subcontract for Dredging Corporation of India at Paradip Port. We are expecting that order next week, and we are bidding for 2 more works, that the National Waterway 2 Brahmaputra work, which is going to be subcontracted by Dredging Corporation of India, and Haldia Reach's job, which is about 250 crores. So these 2 works are being at the tendering stage, and we are participating, and highly likely that we'll be able to secure those works.
Okay. Many congratulations for the same. And also one last thing, just like Bahrain, you have made an entry. I mean, that is amazing that a small entity from India has planted India's flag over there. Are there any other opportunities in the Middle East area that you are exploring?
We are very actively exploring Saudi Arabia's business, and we are in the process of identifying a strong partner that we have identified in Bahrain, which has helped us start the business very smoothly. So once we have the strong partner and the formalities of registering a company and getting the required permissions and NOCs from the government, we being so close, Bahrain being so close to Dammam and Saudi Arabia, we will definitely plan to do work there along with our equipment in Bahrain.
All right. And thank you very much, and many congratulations for having achieved this stage where you are entering the main bourses. Wish you the very best, in the larger stock exchanges.
So much, sir. Thank you.
Thank you. The next question is from the line of Pratik Kulkarni from Kamakya Wealth Management. Please go ahead.
Yeah. Hello, sir. Thank you for the opportunity. As I see that the management have said that we'll be closing in on minimum 60 crores of revenue for profit for FY'25. I just wanted to ask that what are the risk factors in this, high growth journey which the company is currently going through?
There is some, if somebody can tell us if there is a call coming in or something. There's a sound coming in right now.
Hello?
Hello?
Yeah, it's not from my side.
Okay. Can you repeat the question, please?
Yeah. So, as I see that the management has given, guided for a minimum of 60 crores of net income for FY'25. I just wanted to ask about few risk factors which you can expand upon for, the high growth journey the company is currently going through.
See, the risk factors, any contracts are limited to 2 we consider is identification of a proper equipment to have the highest efficiency and to have a good understanding of the type of material that we will encounter in a contract. If you are sure of mitigate this risk properly, the production is in line with the plan, and we are able to achieve the required revenue and the margins. So knowing the site and the site data is very important.
Yeah. So, and what would be the, total opportunity for our national inland waterways, if you could, quantify it?
Sir, it is still evolving, but if we take a thumb rule, then about 172 crores over a period of 3 years, so 57 divided by 170. So it's about 35 lakhs. Okay, sorry. Just a second. What is that? 175 divided by 3 58 and divided by 174. So you can roughly translate it to 35 lakh rupees per annum per running kilometer.
Oh, okay. So that's quite a big number.
Yeah, I mean, it's an evolving process. What are the tenders coming out? How many kilometers the government wants to maintain? So this is a rough estimate of about 35 lakh rupees per annum per running kilometer of a river that the government needs to spend on as of today's rate.
Okay. Yeah. Thank you, sir. That's from my side.
Thank you. The next question is from the line of Shubham Jain from HEM Securities. Please go ahead.
Hello, sir. It's audible.
I'm sorry to interrupt, sir. There is some background noise from your line.
Hello, sir. Good evening. I'm audible.
Yes, good evening. Please go ahead.
Sir, I have a simple one question. As we mentioned in presentation, we do not bid below 30% EBITDA project. So, sir, the main point is then what is the reason for 20% lower EBITDA, as you mentioned in just earlier over Concall?
Sorry. Say again.
Sir, my question is, what is the reason for 20% lower EBITDA, as you mentioned earlier over Concall? You mentioned we are targeting 20% EBITDA, around 275 to 300 CR revenue.
No, 20% PAT, sir, not EBITDA.
Oh, sorry. Thank you, sir. I think it's EBITDA for your side. So this is my question. Is 30% as we mentioned already?
No, we spoke about bottom line. So bottom line PAT will be between 20 to 23%.
Oh, okay. Absolutely fine. Thank you so much, sir.
Thank you. Ladies and gentlemen, in the interest of time, we will take this as the last question. I would now like to hand the conference over to Mr. Sujay Keval Ramani, sir, for closing comments. Over to you, sir.
I would first of all like to thank everyone who has believed in the company till date and will continue to do so. I would like to mention that the fundamentals of the company are very strong. We have a very good management and team which is growing. We have already started work and are maintaining repeat orders from 3 countries right now, Myanmar, India and Bahrain. We intend to grow into a country or another country in the next 2 years. It's a growing company. We have been on target in the last 10 years. I would say that we may have disappointed a few people by a lower revenue this year, but it has never been our intention or any fault or a gap from the side of the management, but it has been a situation. We will try to fix it and rectify this year. I would say thank you everybody for that.
Thank you. On behalf of Knowledge Marine and Engineering Works Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.